Three stocks I'm buying July 2019 edition. Welcome in, guys, to my favorite series I do on this channel each and every month. If you're new here, I'm Jeremy, and today we're going to talk about three stocks I'm planning on buying in the upcoming month being July 2019. And not only do I share what three stocks I'm planning on buying, but I go into detail on why I am specifically buying these stocks. So I hope you guys enjoy this video as much as I enjoy making it for you. Make sure you smash the thumbs up button if you enjoy these videos each month. And as always, let me just say, don't ever buy a stock just because I'm buying a stock, and don't ever buy a stock because anybody's buying a stock. No matter how much you respect them, how much you like them, always make sure you're doing your own research work and always making your own buying decisions. And with that being said, guys, hope you enjoyed today's video. By the way, Becoming a Master of Stock Market course is linked down there in the description, and then it's 70% off for the next few days until the month of June ends, guys. So if you want to go ahead and take advantage of that and learn about everything I look for in a stock, make sure you go ahead and take advantage of that, guys. Link down there in the description. With that being said, let's get into this. Alrighty, guys, coming in as the first stock, this is actually a smaller company that not a lot of you guys have probably ever heard of before, and it's actually a retail related company, which I haven't been very bullish on retail in many years, but I gotta say, I'm actually bullish on a couple retailers right now, and this one specifically is named At Home, ticker symbol HOME, all right? Now, this company has a business model in which essentially, imagine you buy a home, okay? Or imagine you just own a home in general or apartment or something. You buy decorations for that, right? You're like, oh, that counter over there, they need something. Oh, I need a rug for this room over here. Oh, I need some Halloween decorations. Oh, I need some Christmas decorations, etc., okay? All those sorts of things is what they sell. They have very big store formats. These stores are huge. Many of them are tens of thousands of square feet, okay? So these are not small stores, and they also do sell furniture products, but they're not necessarily a furniture retailer. So it's not like really one of those stores that you think about, oh, I need a new sectional for the living room, let me go to At Home. It's more like, hey, maybe I need a couple new bar stools, let me go look at Home, okay? So that's their business model, very big store format. They try to compete on price, and they try to compete on selection, okay? Which a lot of their competitors, especially a lot of smaller competitors, they can't compete as much when it comes to price, and they can't compete nearly as much when it comes to selection, but At Home does a great job of this, okay? At Home has a market cap of 425 million roughly, and that is a very small company. When it comes to the stock market, like most market caps are in the billions of dollars, and a lot of these companies nowadays have tens of billions or hundreds of billions. So it's actually a pretty small company. Share price on this one is $6.60 as of right now. So why am I bullish on this stock, okay? And then we'll kind of get to the bad with the stock, which it does have some negatives for it, okay? But it definitely has a lot of positives. So one is, I believe the store count will be able to expand by basically 3 to 4x where it is now. Essentially, they have just under 200 stores open right now. And when I kind of look at retail, and I look at a lot of their bigger competitors and whatnot, and their type of store counts, I believe At Home can get to a place where they have 600 to 800 stores in the United States of America over time, okay? So which means they have a lot of growth ahead of them when it comes to expanding store count over time. And they're also building their online business right now simultaneously, okay? So not only do they have a ton of expansion opportunity when it comes to the online landscape, but just physical stores, I think they can 3x to 4x. And the good thing is, a lot of stores are going out of business, so which means a lot of times these rents come down. And a place like At Home that actually has a successful business model can actually pay cheaper rents than if you have a ton of competitors to compete with, okay? So that's one of the reasons I'm very excited for this business. Also, their comp store sales, which is one of the most important metrics you can look at when it comes to a retailer or whether it comes to a restaurant name or something like that. You always want to look at comp store sales, which basically is how much did sales go up or down in the past year versus the previous year, okay? And about 21 of the past 22 quarters for this company have been positive when it comes to comp store sales, which is once again one of the most important metrics you can look at. Now, this latest quarter, they had a negative 0.8% number, and everybody flipped out over this. Now, first off, 0.8% number negative is not that bad. Second off, this was such an unbelievable hard quarter. The first quarter, which basically covered January, February, and March, was such an unbelievably difficult quarter for any physical retailers out there, and the reason being is it was one of the coldest winters in the United States in a long time. Like, it was unbelievable. And so if you're thinking about it, was somebody really going to go out there and run to go get some new decorations for their house, or were they going to go buy a new chair for the corner over there when it's freezing cold and everything's covered in snow? No, okay? I mean, I live in Las Vegas, okay? I live in Las Vegas, like one of the hottest places in the United States. And I remember, like, in February, I had snow this thick on my lawn, and I was like, what the heck? Did I move to like New York or something? I'm like, I live in Vegas. Like, it shouldn't be snowing. I had this much snow on my back lawn. Like, that was crazy. It was an unbelievable winter in the United States of America, and that hurt retail sales when it comes to physical retailers in a massive, massive way. And so in my opinion, that's the main reason they came up with a negative 0.8% number. Everybody freaked out. Stock dropped by 50+%, which is awesome because that opened up an opportunity for me to be interested and start actually buying the stock now. But needless to say, it was a huge overreaction in my personal opinion when you're coming off of a brutally cold winter like we came off of in the United States, okay? Expanding revenues and expanding net income. 2 years ago, this company had net income of about 27 million. This past year, they did 48 million, and their revenues have grown substantially over the past several years. And you guys know I love a company that's expanding revenues and expanding net income at the same time. And this business model absolutely meets that. And in future years, I think they're going to be able to earn a lot more on that bottom line than what they're earning now. Although here in the short term, over the next 6 to 18 months, they are going through some stuff that we'll get into in just a minute, okay? Expanding brand names. So as they continue to expand store count and as they continue to expand their marketing budgets, obviously the brand names getting out there heavier and heavier. And there's a type of store, a lot of times you'll take friends and family members because it's a cool store to go to. And you might be, hey, let's go check out some Christmas decorations and whatnot. And you take friends and family there, and it helps expand the brand name over time, okay? So very successful company with an expanding brand name. They have a forward P under 6 on this company right now, which I think is ridiculously too low. Like it's unbelievable because this is a store that most of the time they have positive comp store sales, which means their stores are getting stronger. And then they have a huge opportunity, in my opinion, to expand store count over time. And so I'm looking at this forward PE and I'm like, it just doesn't make sense. Like, even if it was around a 15, it wouldn't really make sense. Down around a 6, like, it's just ridiculous, in my personal opinion, when it comes to a name like this. But it is what it is. Great opportunity for me, okay? Good management team. When I think about management team in retail, I'm really looking for like conference calls and to hear like how in tune they are with things. Retail is an industry that I know very well, and so I can just kind of pick up on, you know, this management team has their stuff together or they don't. And it's not just easy to have, you know, comp store sales that are positive nearly quarter in and quarter out. That's more proof of a good management team, and the way they've been able to expand the business over the past several years is unbelievable, really, because it is not easy to scale a massive retail company like this in such a short amount of time like they've done. So I would definitely rate the management team as a good management team, okay? Now, so that's like my bullish thesis, and that's why I'm very excited about this stock, and that's why I started buying the stock, and why I should continue to buy the stock throughout the month of July, okay? But there are 3 things that are bads in this stock's case, okay? The first one being the balance sheet. So the balance sheet on this company is not good at all. Matter of fact, the balance sheet on the stock is bad. And for that reason, I have to limit how big I make this position. I cannot make this into one of my biggest positions, even though I love a ton about it as far as the valuation and what I think the company can do over time. I cannot make this into a huge position simply because that balance sheet is extremely weak with this company. And so that limits how big I can actually make this position, okay? Balance sheet is weak. So that's one of the bad things. These other things are 2 very short-term in nature. So balance sheet's more of a longer-term issue. Tariffs is a short-term issue. So essentially a lot of the products that this company brings in are from China. I mean, go to every store out there and they pretty much like made in China products, right? So a lot of the products they import have gone from a 10% tariff to now 25%, and the company is going to have to take the hit on a lot of that. They were able to kind of get the 10% tariff to be carried by some of the suppliers as well as the customers, but it doesn't sound like they'll be able to do that with the 25% tariff. So profitability in the short term, until this whole tariff situation gets cleared up, could be hurt, or until they get distribution lines from other countries or something like that, or bring things back to the States, or whatever the case may be, okay? So needless to say, short-term tariffs are hurting the company in their profitability. And the second thing that is hurting them in the short term is smaller competitors are going out of business, essentially, okay? So they have a lot of competitors that are like smaller companies that have smaller store formats that really are not very competitive when it comes to pricing and selection, and a lot of those companies are going out of business right now. And when a lot of those companies are going out of business, they go ahead and discount heavily like what their products they're selling for, because they're clearancing items out, they're going out of business, like it's just negative. Obviously the creditors are trying to get whatever money's left there in the business. So in the short term, as some of those smaller competitors go out of business, it does hurt their business. So tariffs, smaller competitors going under, short-term problem. Balance sheet, a longer-term issue, which is why I can't make this into a massive position, but it's absolutely a position I can make into maybe a $20,000, $30,000, maybe $40,000 position and kind of limit it right there. But it is a stock I should be buying through the month of July. Okay, that was the first one. Let's get into number 2. Alrighty guys, coming in at stock number 2 is, oh my gosh, another physical retailer, which makes me think, is this like 2011? I cannot remember the last time I was buying 2 physical retailers, okay? And this one is Nordstrom, ticker symbol JWN on this one. They own some pretty successful brands, needless to say, okay? They own, obviously, their Nordstrom stores, which are big department stores that really sell high-end clothing, okay? If you want the nicest pair of high heels, you go to Nordstrom, okay? If you want an expensive suit, you go to Nordstrom. If you want a pair of designer jeans, you go to Nordstrom, okay? That's what type of store this is. Nordstrom's really a brand that's catering to like the top 10% of income earners out there, okay? You don't go to Nordstrom because you're trying to buy cheap clothes, okay? You're trying to buy the most expensive brand names out there if you're going to a store like Nordstrom. They're not competing with JCPenney's. They're not competing with Macy's, okay? They're not competing with Dillard's. They're really in their own category, pretty much by themselves, okay? Maybe Neiman Marcus is a competitor, but really they're competing on the very high end, okay? Then they have Nordstrom Rack, which Nordstrom Rack is essentially, this is not in actual big malls. Usually this is in like strip malls or just standalone stores in general. And Nordstrom Rack is really like inventory that they couldn't sell for full price at the Nordstrom department stores. They'll go ahead and discount that and sell it at Nordstrom Rack, okay? So for cheap people like myself that might want to buy a $155 dress shirt, but get it for $45, we go to Nordstrom Rack, okay? That's essentially what the business model is. Very successful stores, extremely profitable for the company. Generally, they're still able to sell that clothing for profits, okay? Even if it is discounted quite a bit, usually they're still able to make profits. Everything's just on big racks. It's a whole different experience than actually going to a Nordstrom store. You go to an actual Nordstrom store, super fancy. You go to Nordstrom Rack, and it's like maybe slightly upgraded from like Ross or something like that. Like it's not really a super nice experience, but a ton of designer clothes and for generally much cheaper prices. And then they have Trunk Club, which is really like a competitor to something like Stitch Fix, which is essentially they'll send you like 5 different clothing items, all right? And these clothing items are picked out based upon you do a bunch of questionnaires online. They use artificial intelligence and whatnot to kind of figure out, okay, they'll probably like this type of shirt, they'll probably like this type of dress, they'll probably like this type of high heels, and et cetera, okay? And so they send you these different outfits and you can keep them and pay the price. It shows you the price right there. Oh, this pair of shoes is $150. Okay, I'll keep this. Oh, I don't like this. I'm gonna send this back. And over time, it basically gets to know you better and better, and hopefully the clothes they send you will become better and better in the future, and hopefully you keep more and more of the clothes as time goes on, okay? Not everybody's into that type of business model, but there is certainly a segment of the population that actually enjoys that experience. Look at a business like Stitch Fix, right? This has become a very big business on the back of basically consumers that maybe have good money, but they don't want to actually go to physical stores and they want somebody to pick out their clothes for them, okay? So that's definitely another big opportunity in an expanding market, all right? This company right now has a market cap around $5 billion. I think it's just slightly less than $5 billion right now. Share price of $32.50, which it has been a long time since Nordstrom has been around $32.50. Unbelievably low share price. Great brands, okay? I'm buying a company that has these great brands, iconic brands, okay? Nordstrom Rack, Trunk Club, I wouldn't really put it in that type of category yet, but it's obviously an expanding brand. But they're known for quality. They're known for the best types of clothing items, the most in style fashions and things like that, okay? So these type of brands, when you just kind of think about them, if you're a customer of theirs, you trust that type of brand, okay? Company with a forward P of 9, which I think is far too low when you're talking about a company with the type of brand names this company has, okay, and this type of stability a company like this has. A forward P of 9, in my opinion, it's just ridiculous, okay? It's just undervalued. It's too undervalued, okay, which is my main play on this name. It's just an undervalued name, okay? Price to sales ratio of 0.31 on this stock, okay? I don't know when in the past Nordstrom ever had a price to sales ratio of 0.31 on it, honestly. I can literally not think of a time when Nordstrom ever had a price to sales ratio of 0.31. Like usually a price to sales ratio of 0.6 to 1 is where Nordstrom usually trades. So down at a 0.31 is unbelievable. Basically, anytime a price to sales ratio gets under 1, it's generally low. When we're talking about 0.31, that's insane, especially when it's a company with the quality of brand names this company has, okay? They've been able to expand net income from $354 million to $564 million in the past 2 years, and you think of all the negatives in physical retail. You think of all the bankruptcies. You think about mall traffic and how much that has declined. And you think about all these sorts of negative things that have happened for physical retailers, and yet this is a company that's been able to expand their net income quite substantially over the past few years despite such a negative environment for basically anybody that's a physical retailer. So that really speaks volumes to the management team at the company, and that really speaks volumes volumes to the brand name that Nordstrom and Nordstrom Rack have, that they could actually expand their businesses in that type of environment that is so negative. Like, most physical retailers have seen their net income drop by a substantial matter, and count. I mean, we could go through a laundry list of physical retailers that have gone out of business, but yet you have this specialty one that's really playing on the high end, and guess what? Their business has actually expanded quite dramatically. And that brings me up to my next point, okay? Now, this is not a core reason to why I bought this position. It's basically just a great company that's undervalued is why I'm buying it, but they are a perfect buyout candidate for Amazon. If you think about Amazon, two categories they do not dominate right now, but they want to, okay? One is food and the other is clothing, okay? And so what did they do in the food category? They went ahead and bought the biggest food retailer they could that played on the very high end. It was kind of the cool brand name and like the one that understands trends and whatnot. They bought Whole Foods, right? They go out there and they buy Whole Foods. Whole Foods stock had dropped dramatically the year or two previous to Amazon buying it. So Amazon goes ahead and buys Whole Foods for a cheaper price than a lot of people probably would have thought they could have got that stock for. And once again, Whole Foods competes on the high end. Like, not everybody shops at Whole Foods, right? It's like the top 10, maybe top 20% of income earners maybe do shop at Whole Foods, okay? And then you look at Nordstrom, and it's a perfect acquisition target for Amazon. Amazon wants to take clothing more seriously. Well, they're going to need to probably acquire somebody that's really successful, somebody that knows clothing really well, somebody that knows trends, somebody that has massive amounts of data on basically what people like, what people buy, and oh, if they buy this outfit, they might buy this outfit, and all those sorts of things, okay? And has a proven management team that is very successful when it comes to running this type of business model. So if you're Amazon, you're thinking, how could I get bigger in the clothing game? And how could I buy a company that basically has all these supplier relationships with the highest of the highest end brands that are trusted? Nordstrom is a perfect buyout candidate for Amazon. And guess what? Nordstrom stock has fallen about 50% over the past year or two. So Amazon will get to pick this company up for maybe 50 bucks a share, $55 a share, or somewhere around there. And I can guarantee you, if Amazon said, hey, we're going to try to buy you guys out for $55 a share, shareholders will probably vote yes on that, being that the stock is at $32 right now. If you're going to give shareholders a sellout for 55 bucks a share when the stock's at 32 right now, a lot of shareholders would probably say, we'll take it, okay? Perfect buyout candidate for Amazon, okay? Once again, not one of the core reasons I'm buying this stock, but it is a perfect buyout candidate. They do have expanding online businesses through Trunk Club and through their other businesses as well, as people kind of get more and more accustomed to ordering online. If they're trying to buy something that's expensive, like you know, imagine you're buying an expensive purse or something like that, right? You want to buy from a brand that you know the purse is actually real, and it's going to come to you in a timely manner, and it's not coming from like a fake Chinese website or something. So if you're going to buy something expensive like that, you're going to trust the brand that actually will give you the authentic goods, which would be a business like Nordstrom. So they do have an expanding online business. This company has a 4.5% dividend yield right now, which essentially means, you know, I'm not necessarily a dividend investor, but I love to make some dividend money. So while I hold this stock, I'm going to be able to make 4.5% of my money. So even if the stock doesn't go up a ton over the next few years, you know, let's assume I hold this for the next 3-5 years, even if the stock doesn't move that much, I still make 4.5% on my money per year. Now, I'm hoping the share price will go up over time as well, as hopefully the business expands over time, and hopefully as the business gets more respect over time, and it's not like, oh my gosh, this is going to go out of business or something like that. But it is nice to make that 4.5% dividend yield, okay? Now, the one thing that I can think of that's bad for this company is mall traffic. Mall traffic has shrunk dramatically over the past few years. We know this, okay? But I think mall traffic now is at a point where it's going to stabilize. It could decline slightly, but that's more in the malls that are not in such the nice neighborhoods, okay? So if you think about the areas Nordstrom is, they're in the most expensive malls, in the most expensive zip codes and things like that, okay? So Nordstrom's really in a space where they're not really so reliant on mall traffic. It's a slight negative for the stock, but people don't just go and buy a $500 pair of high heels, okay? That's usually a premeditated decision. It's not like somebody's just walking through the mall and they're like, whoa, I just went to the Apple store and oh my gosh, there's a $1,000 purse over there that I just have to have. Let me buy that now. Usually that's a premeditated decision, okay? Somebody doesn't just, you know, on happenstance go buy a, you know, a $10,000 suit or something like that. Usually that's a premeditated decision, okay? So a company like Nordstrom, they're slightly hurt from mall traffic, but not nearly as much much as a brand that might be dependent upon people making impulse buys and things like that. People don't impulse buy things that are hundreds of dollars or thousands of dollars, because generally most folks just don't have that kind of money to make those type of impulse buys. So needless to say, it's strictly a buy that's basically on valuation, where the company's undervalued, great brand name, and I think we'll do good on it over time. And I would like to build that into a pretty decent sized position. Okay, I just started buying it very recently. Let's get into stock number 3. I know you guys know this one. Alrighty guys, coming into stock number 3 is a stock that I've been buying for the past several months, and I'm super excited because I'm going to basically be able to close out my position in terms of how big I wanted to get it. I basically wanted to get 300 shares in the stock, and I should be able to finish out my position to get the 300 shares I have wanted in total. I'm getting very close. I think we're up to 260 or so. So I think we need about add maybe 40 or 50 more shares in the month of July, and then we'll be at our 300 shares, and then it's a hold for the next 3 to 5 years, and we'll see where things go. And this is Tesla stock, ticker symbol TSLA. If you do not know Tesla, oh my gosh, you must never have watched my channel ever in the past, okay? They're an electric vehicle maker at the end of the day. They do have an energy side of their business, but because electric vehicles have basically required so much of their attention, they're basically an electric vehicle company right now that has a very small side project that is the energy business at the moment, okay? Market cap on this one of under $40 billion right now, and a share price on this one of about $220 a share, okay? Now, why am I bullish in relation to the stock, okay? Now, this was probably the messiest one because I have a lot of reasons why I'm bullish for this stock, okay? So let's think about Tesla for a moment. Let's think about the facts. They are the dominant electric vehicle maker when it comes to the numbers in the United States and Europe. This is really by a mile and a half. There's no one that's really even remotely close to pushing them when it comes to numbers as far as electric vehicles go. So that's a great thing. And why is this such a big thing? Is because I believe in the future, the question is how many years does it take to get there? 3 years, 5 years, 7 years, 10 years. But I believe all cars, trucks, and SUVs in the future will be electric. And so when you're the company that has a dominant market share when it comes to electric vehicles, and everybody will be getting electric vehicles in the future, that's a great thing for you. Like, I literally can't imagine somebody going and buying a new ICE vehicle 5 years from now. I can't get there mentally. Like 5 years from now, somebody goes and buys a new ICE vehicle off the lot. Like, I can fully understand somebody buying a used one, but buying a new one, it was just like I can't even comprehend that. Even like 3 years from now, even nowadays, I think it's crazy to buy a new ICE vehicle. You buy used because you only got $3,000 or $5,000, you need to buy something cheap, then it totally makes sense to buy a used ICE vehicle. But when you're talking about buying new, like even now, never mind 3 years from now, 5 years from now, like I can't imagine why somebody would want to buy a new ICE vehicle in the future, okay? So I believe all vehicles in the future will be electric vehicles, all right? And when it comes to electric vehicles, they're essentially 3 to 5 years in front of anybody you want to look at. They're 3 to 5 years in front when it comes to tech, when it comes to supply chain, when it comes to overall scale. If you just look at the tech that's in the cars versus their competitors, it's not even really close, okay? They're 3 to 5 years in front of them when it comes to that. The supply chain, which is such a big thing because no one else has really scaled in mass when it comes to electric vehicles yet. In terms of all the big players, their supply chain is off the charts. It's 3 to 5 years in front of the competition. Their overall scale, no one has gotten to a scale that's even remotely close, and it probably will be at least 3 to 5 years before another car company can get to this type of scale when it comes to making electric vehicles. Everybody talks about, oh, Ford, oh, General Motors, oh, Toyota, Nissan, blah, blah, blah. These companies, they have gotten to scale. They've gotten to scale when it comes to building ICE vehicles. They haven't gotten to scale when it comes to building electric vehicles. It's a different animal. Just because ICE vehicle is built a certain way does not mean an electric vehicle is built a certain way, okay? So 3 to 5 years in front of the competition, that's a very positive thing when you're talking about the whole market in the future is going to be going electric, in my personal opinion, okay? Model Y is coming in 2020, which is their affordable SUV, and that honestly should be a much bigger seller than actually Model 3. When you look at the SUV market, it's just the number should be much bigger for Model Y than the Model 3. And you look at what Elon Musk said. Elon Musk said that basically when he went ahead and presented for the Model Y, he said he couldn't even sell it hard because he didn't want to take sales away from Model 3, and he was afraid if he sold it hard, it might sell so well that people might not want the Model 3 anymore or something like that. So needless to say, if Elon Musk is scared about it selling so well, it's probably going to sell really flipping well, okay? Then Tesla trucks should be coming as far as production at some point in 2021 or maybe 2022 at the latest. And the Tesla pickup truck, we should actually get to see that. It should be shown off at the end of this year at some point in time. That's really exciting. The truck market is just massive. If you think about what's the #1 best-selling vehicle in the United States of America, it's actually the Ford F-Series trucks. They sell near nearly 1 million units a year. So if you think about Tesla, they just kind of go to a bigger thing. They're like, oh, let's make a sports car, okay, we just sell a small amount of that. Let's make a luxury sedan, we sell a little more of that. Let's make a luxury SUV, we'll sell a little more of that. Let's make a somewhat affordable car, Model 3. Okay, now we're starting to do some big numbers. Model Y going to be even bigger numbers, and the pickup truck could be even bigger numbers than Model Y, okay? So needless to say, over the next few years, there are going to be massive years for the company. We should see revenues go through the roof over the next few years, okay? Then, as these little side projects that aren't so little, okay, you have the Semi and you have the Roadster, okay? Roadster is going to be like a $250,000 sports car. Obviously, you know, what, 1% or 3% of the population could actually afford something like that. Very small percentage, okay? So the Roadster might not do huge numbers, but the Semi has massive potential. The Semi truck has massive potential for the company and could be a revenue generator in the, you know, $10 billion+ range for the company on a longer term basis. But basically the Semi is going to be hard to produce because it's going to need so many batteries, and you have the Model Y, you have the Tesla truck, you still have Model 3, only so many batteries to go around over the next few years. Now the Semi actually might have to get put on the back burner just a bit for the next, you know, year or two, maybe even 3 years, unfortunately. I mean, if they could just make way more batteries way faster, then we could get to even a bigger scale where Semi could come out and start doing huge numbers over the next year or two. You have Shanghai, the China factory, which is going to open over the next few months, and that factory is going to be a game changer for Tesla. I think they're going to sell the most profitable vehicles out of that factory, and I think numbers are going to be huge. The Chinese market could be potentially a bigger market for Tesla over the long term than any other market. We'll have to see over the next few years, but when I look at China and we'll look at how they're going to push for EVs, and when I look at the brand name that Tesla has, very strong possibility that China long term could be the biggest market for Tesla. We'll have to see what happens with that, okay? But needless to say, that factory opening is a game changer. They have a visionary CEO of this company. If you're buying Tesla stock, you're buying for the visionary CEO that is Elon Musk, which there aren't many Elon Musk out there. Like if you think about just like how many public companies you can buy, and you think about like how many actually have a visionary CEO at the helm at that company, I can think of maybe 3 to 5 off the top of my head. And that is it. And that is out of thousands and thousands of companies, okay? Like some that come to mind is the NVIDIA CEO, Jensen Huang, obviously Jeff Bezos comes to mind. And then off the top of my head, like I can't think of that many CEOs that are really like visionaries. And you have Elon Musk, obviously, okay? So he's in a very special class of the visionary CEOs, okay? They're winning at autonomous driving, and I think they will win long term. If you look at what Tesla has out there in the real world when it comes to autonomous driving right now, it's really quite a bit ahead of any other competitor out there. So they're already winning at this. I think they'll win long term. If they win long term, that's another thing that will get the company to market cap of 400 billion in the future, or 450 billion, or 500 billion in the future, versus, you know, less than 40 billion right now. If they can actually win at that, even if they're number 2, it's going to be huge for them. But if they're number 1, which I think they have a great chance of being number 1 because of the amount of data that company collects when it comes to autonomous driving, and never mind in future years, I think they're going to probably win that. And that's something that will get this company to hundreds of billions of dollars on market cap in the future, okay? Only bad thing I can possibly think of, in my personal opinion when it comes to Tesla, is they've never had a yearly positive net income number. I think that possibly could come in 2020. When I look at 2019, it's possible, but I'm not sure it will happen because obviously they have to ramp the Shanghai factory. They're going to probably do a lot of tooling for the Model Y and whatnot. So they have a lot of different costs going around for the company here in the short term. So, you know, yearly positive net income might not happen, but that could very well happen in 2020, which I think when that happens, that's also a game changer for the stock, because you think about that, 2018 was the first time they could prove, you know, hey, we can make a positive net income on a quarterly basis, back-to-back quarters. But now the question is, can they do it on a yearly basis? I think 2020 is going to be a big year where they could potentially actually come in with a positive net income number. And so needless to say, that's why I'm so bullish on Tesla. I'm happy to, you know, hopefully get my position finished building out in this month, have my 300 shares, and then we wait 3, 5, 7 years and we see if my whole bullish thesis plays out, which I think it will. So anyways, once again, if you guys enjoyed this series, make sure you smash that thumbs up button. Let me know what your opinion is on any of the stocks discussed in the comment section. Thank you for watching and have a great day.